Graham, when we refer people over to you, I always explain it. The reason we refer people over to you from an investment perspective, you need a lender that, one, is licensed to lend in all the states you work in. We operate in multiple different states. The reason we send you our clients is that you're licensed in all the states we work in. And so they can have one lending resource in multiple locations as they diversify their portfolio. You're very well versed in financing investment properties. It's important to know the procedures and the process. That's been a big pain in the ass with the big banks, as it is not only from a customer service point of view, like you said, but there's just so many, sometimes they're asking for closing stuff that isn't even relevant for that state. It's just like they have no idea. And it really is a challenge because it drags out the closing process. It's a pain in the neck to get the thing closed, and it's just frustrating for everyone. You obviously work in this space. This is your profession and in your niche. And so you know exactly the closing process. You offer the most competitive rates and fees. That's a huge point from a financial perspective. And you're also an investor yourself. And so that's going to be that kind of higher level mentorship, especially from a financing piece that's important in an investor building their team. So those are the things that I mentioned to investors, why it's important to have an excellent lender in their corner like yourself.
Well, Zach, there's a couple of things that are important that a lot of times are not brought up. Is, they got their friend, it's a brother, they do all their, personal houses, they're my loan officer, they live in California, wherever. But they may work for a company that may not understand the turnkey model. And that turnkey model has been a big challenge ever since the meltdown in '08, because Fannie Mae changed the guidelines, because it really wasn't the turnkey that was doing all the fraudulent activity. There was builders, even some of the big national builders. They would, they'd find a straw buyer. They would do everything with a power of attorney. Nobody knew who was actually buying the property. Once the property was closed, they'd put a tenant in it, and the tenant would pay the management company. Management company would never pay the loan, and it was a mess. So Fannie Mae, changed the guidelines and said, okay, we don't really like to have the seller manage the property post-close. Well, you and I both know that's a strong benefit. Well, because of that, a lot of the lenders out there, they don't interpret that guideline properly, where they won't do the loan simply because it doesn't matter if they're 700 or 800 credit score, $1 million in the bank, the whole 9 yards. If it's a turnkey property, they won't do it. Good example is we're delivering most of our loans directly to Fannie right now. We have the option to deliver them to aggregators or servicers. And let's say we have 20 that we could deliver to. Only 2 will accept a turnkey loan. The rest won't. So, the brother or the cousin that's in my backyard, I've done all these loans, he may be great, but his lending source may not understand that. I run into that quite often.
Yeah, it's quite a challenge just having a lender. I mean, this is a unique space that people are financing, and you need to have someone that's familiar with it. If someone was looking to buy their first investment property and they just hadn't paid attention to or were unaware of where interest rates were, 3, 4, 10, 20 years ago, I mean, we really have like the lowest interest rates we've seen in history, right? I mean,
True.
About the kind of opportunity that this is really a time to try to maximize your debt to, offset inflation and to get the best returns that you can on rental real estate.
We are the lowest it's ever been, and we're still there. And I think we're probably going to continue to be flat for the most part for at least another 6 months. The federal government, this is their way of managing the economy, if you will, get those interest rates down. So the pandemic and the lowering the rates happened really at the same time. So it made everything go crazy. And the market didn't know what to do for the first 2 or 3 weeks. They all of a sudden, they jumped off the bonds and went somewhere else, and the rates shot up. And for like 2 weeks, I didn't even lock a rate because we couldn't figure out where it was going to land. It was crazy. But then they settled back down again. They just kind of slowly kept coming down. And they've been pretty flat for, I'm going to guess, 6 months. We're still in the low 3s right now, regardless of the down payment percentage. It could be as low as 3 to 3.5% with no points. Other lenders will vary, but that's where we stand today. So, I mean, I remember starting investing years ago at 7.5%. I was still making it work, And I tell people all the time, I'm out of the Fannie box. I'm doing 4 3/4. They go, "Oh, I'm sorry to hear that." Well, it ain't that big a deal. It still works, but do take advantage of it right now. The inventory is there. The rates are good. I mean, we're still making lending on, investment property. So go for it.
I love that perspective. It's all perspective, right? Because in this probably drives you crazy sometimes with people, before they lock rates. And I want to ask you about that as well as like what that means to lock a rate and what the timing is associated with that. But yeah, someone that's so concerned about like 0.25% of an interest rate, it's like, and that doesn't even matter in the grand scheme of things. I mean, relatively, this is an extremely better rate than what you're used to. I mean, again, yeah, at 7.5, at that point in time, that's probably a good interest rate and it's still cash flowed. The reality is that, you're using that leverage and acquiring an asset that's going to depreciate over time, offset inflation, provide income. You're likely going to refi or sell in 1031 that property long term anyways. It's not like you're going to even be paying that, whatever that interest rate is for 30 years. You know what I mean? So
I love having that conversation when people call and say, I'd like to can you tell me what your rates are today? And I tell them, it's in the low threes. And they go, no, seriously, on an investment property rates, because they think it's owner occupied. So those are investment rates, really. And it is kind of hard to believe in most cases.
You brought up a good point. Again, this is, we want to hit home the points of someone is unfamiliar with, financing in general. Some people are unaware that a primary residence, that's probably going to be your lowest rate. That is a different rate than an investment property. That's just how it is, right? We're probably in point and a half roughly.
Right. Okay. Correct. That margin's a lot narrower today than it was before. And it usually was about a point, but we're probably closer to like a half a point these days, the way the margins are.
So yeah, investment property with 20%, 25% down, whatever the case is, you're still going to be a higher interest rate than a residence where you're living in the house. That's just the type of loan and that it is. Okay. Thanks for clarifying.
Graham, can you explain what it means to lock a rate? And I remember buying my first property, the lender goes, do you want to lock the rate now? And I was like, how long do I have to decide? And they said, we got 2 weeks. Do I lock it now? Do I lock it in a week? When is it going to go up or down? What do you suggest for people locking a rate and what does that mean exactly?
What we do, first of all, once we get the pre-approval done, we know we got all their docs. Then you guys write the contract. You send it over to us. First thing we do is we ask you, is the property appraisal ready? No. We kind of go into a quasi holding pattern until it gets about 30, maybe 40 days, somewhere in that ballpark. And then when you guys say, yeah, it's ready to go, it'll be appraisal ready next week, we re-engage at that point to the borrower. We talk about the disclosure process. And then at that point, we lock in the rate. And we usually lock it for 50 days. And so that usually gives us enough time to close within the 35 or 40 days, plus an additional pucker in there in case something was delayed, okay? And even with the rates being flat the way it is, even if it comes up on an expiration, I mean, we could still cover the extension without having them to charge, okay? We did launch something last week, which is kind of cool, Zach, that might even help if you're dealing with some builders, not necessarily like the guys in Florida, but if you're dealing with builders that, all they're doing is building the property, then they're buying the property from them. We're doing I think it's 180-day lock, which is kind of cool. And, I'm not going to recommend it unless they start to go up in rates, but we do have that available. The only thing is we just collect a point up front that's refundable at the closing, but it's a win-win. So I haven't really offered that yet because it's really not a proper application, but we have that available.
That's very cool to know. So basically locking a rate is because interest rates vary on a daily basis. So, you always give the disclosure that whatever rates we, talk about today, there's no guarantee that that's where they're going to be tomorrow, week, month, whatever the case is. So they vary daily. Locking a rate means that if it's 3.625 today, that's what you're locking in, regardless if at closing that interest rate is above or below that line. Is that an accurate assessment?
Potentially, but we've been so flat, it's hard to say where that would be. It's very little variance, okay? But, I don't have time for people to say, I'm going to wait because I know the market's going to prove, well, it's really not, okay? Well, and then they call me every day. What's the rate? What's in that? You were asking earlier, what makes a good borrower? Just lock the damn thing and let's go, okay? And so what I do is I tell them, I say, look, if you locked in a rate today and the rates went down, would you be more upset if you didn't lock them in and they went up? Well, yeah, I guess that kind of makes sense. And they lock,
Just got to know where you're at. I mean, like you said, no one's got a crystal ball looking forward, but the rates are pretty stable.
Right.
reality is these are the best interest rates we've ever seen. Just lock the damn thing and focus your time on energy on, something else.
Sure.
Scaling your portfolio. Graham, another question we get quite often is someone wants to close in an LLC or wants to own a property in an LLC for liability protection. And they always want to know, is that something, can I actually take conventional financing in the LLC? Is it better to try to transfer it later after the fact? What's your opinion on that?
Well, as I told you, you get two hats with me as a loan officer and an investor. The loan officer says you cannot do it. Okay, Fannie Mae does not allow for any type of entity vesting, LLCs, limited partnerships, S corps, anything other than your name or a revocable family trust. Okay, as an investor, what I personally do. This is not advice for the record, but this is what I do, and 99% of my clientele will do. Is they'll wait about 3 to 4 months after the loan itself is closed, which means that when we close the loan, we fund it, we deliver these out into the secondary market. And a Fannie Mae investor will buy these loans, they'll re-underwrite it, they'll go through and do their due diligence on the file, whatever they got to do, and then they set it up in their servicing queue if they took over the servicing as well. So even if we delivered the loan and we're still setting it up in our servicing queue, still give us about 3 or 4 months, get a couple of invoices on your belt. Then at that point, get your deed of trust and your LLC documents, send it over to an attorney or an escrow officer and have them retitle it into your LLC. At that point, you don't want to pick up the phone and call the servicer and say, hey, guess what I'm doing today? Where you're going to have the guy on the servicing end that makes $8.50 an hour say, well, Mr. Smith, I'm sorry, we're going to have to call that note due. I've been doing this for 22 years. I've been having the same sermon for 22 years. I've never seen a note called due. You stop making payment on the loan, they'll call it due. On the record, Fannie kind of came up with a guideline about a year ago, maybe a year and a half, kind of basically said, we understand that this is going to take place. And I would love to have the guideline to read it to you. In essence, what they're saying is we kind of understand what you're doing out there and we really don't care. But I can't tell you that, okay?
Yeah,
they just want their money. That's it.
As long as you're making the loan payment, you're not going to disturb. Yeah. We're talking about the due on sale clause. And people research this and get concerned about it. And I've never seen it enacted. I've never heard of that, in the thousands of transactions we've been a part of or have colleagues involved. I mean, it's just unlikely that's going to happen. Everyone is usually transferring to an LLC structure. And what you were referring to is closing in your own name, transferring to an LLC post-closing via quitclaim deed. Just to clarify, someone cannot use conventional financing in an LLC up front. Is that accurate?
Correct. When you get out of the Fannie box, a lot of times with lenders, it's a main requirement. You have to have an entity.
Okay. So yeah, you can quitclaim deed it to an LLC, which again, we do all this with all of our properties. Everyone basically does. It's an expectation. I guess, I've always thought, like, in theory, if they did call the note due, a quitclaim deed just transfers title immediately, pretty much. Couldn't you just title it back to your own name and then you're in the...
Yeah, it really would be that easy. And I do encourage you, when you're setting up these entities, to take a look at single member versus joint member. Get with your attorney on that to see what's best for you and your accountant. If you can get an accountant and an attorney to agree on this topic, you've accomplished a whole lot. Trust me. Zach and I have had this conversation many times over. And then really, there's all kinds of different ways you can, do asset protection. You can do the land trust. You can do the LLCs. There's all kinds of ways to do it. And Zach, you've got a really good source that you can turn your clients onto that kind of gives the whole soup to nuts thing.
Yeah, it's about building that network and having all the right people, like you said, on the same page, agreeing with your strategy and your goals. And that's why, we have that network of real estate specific attorneys and CPAs and lenders like yourself to make sure you're building that network and the team. One other thing I just want to hit on real quick before we wrap this up, Graham, is just we've been talking about conventional financing. That's your realm. And we'll do another video about, non-conventional, private money or portfolio type of loans where you can go beyond those 10 and expand. But just to clarify, these 10 conventional loans, I mean, these are not a one-time use sort of thing. It's 10 in one snapshot in time. So in theory, if you have a group of properties that have equity down the road, you could go and refi those and consolidate into a portfolio loan and open up, more conventional spots, right?
As long as you're not the guarantor of that consolidated loan. If it's in an entity and you're not the guarantor, it does relieve you of that liability, because the way the guidelines read, any leverage against a 1 to 4 family property that has a lien against it, and you're the guarantor of that lien, it doesn't matter if it's private money, commercial, Fannie, you name it, it counts against you. If you got that liability in the LLC, it's not counting against you personally.
Okay, personal guarantee counts as long as there's not a personal guarantee.
Right.
That space, that's kind of like recourse. That's what a recourse loan is you personally guaranteeing it.
Correct.
On recourse, where there is no recourse, they can't, there's no personal guarantee, and we'll expand on that. Awesome. Thanks for clarifying.
One thing I would like to touch on, which is important these days, is forbearance. A lot of people have taken advantage of that, which I'm not I'm not in agreement whatsoever. So a lot of people I know have come to me, since the pandemic started, saying, well, I'm in forbearance right now, but I'd like to buy another investment property. Sorry, I can't help you. The way it works is, if you are in a forbearance program, you have to complete it. If it's a 4-month deal, you got to complete it 4 months. You have 2 options. Either A, pay all the money back, or B, defer it. Either way, once you're done, you got to go back to the servicer and you got to say, I need a letter stating that I'm current and I'm in good standings because I'm trying to do another loan. If you paid the money back and didn't defer it, I can give you a loan day 2. If you deferred the loan, any payments went to the back end of the mortgage, then you have to wait 3 months to get 3 good payments from there before I can give you another loan. So it's very important. I get that from time to time. So anybody that out there that accidentally went into forbearance, didn't realize there were negative repercussions, just keep that in mind.
Graham, we really appreciate you taking the time out to educate ourselves and our listeners and clients about the lending industry right now. Obviously, you're our recommended lender, so we pass out your information to any client that's working with us. But if people just generally wanted to learn more about you and get some more information, how can people find out about you?
My toll-free number is open pretty much 24/7, and I really am. If I'm even on the after hours weekend, if I'm available, I'll take your call, and if I'm not, please leave a message and I'll call you back. But my toll-free number direct is 855-326-6802. That's your best bet.
Sounds good. And then the process basically is someone, if they're interested in connecting with you and qualifying for a loan or getting pre-approved, it's basically contacting you, filling out an application. What's the process with that?
Yeah, I'll send them out a link to the application page. It takes about 10 or 15 minutes to fill it out. My team will circle back with you that day or the day after. We'll ask you for the necessary items to validate the earnings and assets. And once we receive those, we're probably down to 3 days to get your credit approved. Then once we get your credit approved, put you back into your team and you guys get them in touch with one of the providers and write a contract.
So basically it's apply for a loan. Pre-approval should take roughly 3 days from the point that they turn all the information in. And then basically once someone is pre-approved, that's the first thing that we need is a pre-approval to show that they're serious about investing and that they're able to obtain financing. Just like any typical real estate transaction, that's the first step. And then they're good to go.
Correct.
Excellent. Well, this has been very educational, Graham. Again, thank you for your time. And we look forward to continued business.
Thanks, guys. I enjoyed it.